Everyone, good afternoon, everyone, good evening, everyone. Today is Sunday, 8th December 2024, and hopefully today, 10 o'clock p.m. to 11 o'clock p.m., markets will be opening. As usual, if you check the month, or actually the forex calendar, the actual month that we don't normally trade is June, July, August, and also December because of the holidays. So most of the times, if you look at the chart, you're going to see much of wicks, candlesticks, wicks, mostly forming. So today, what we are going to do, we are going to analyze all the pairs that we have over here in my watch list. So this is a weekly analysis that we are going to do. I've already posted a video, best top-down analysis 2025, how you're supposed to do your analysis. So we are going to apply that same concept in all the pairs that we are going to analyze. So on my list over here, we have gold, oil, BTC, you have GBP USD, you have Australian dollar versus USD, then we have UK oil, Dixie, Euro USD, USD JPY. Then we have some of the major pairs over here: USD CHF, USD CAD, NZD USD, Ethereum USDT, US30, Euro JPY, Euro AUD, Euro GBP, Euro CAD, Euro NZD, Euro CHF, GBP CAD, GBP AUD, GBP CHF, GBP NZD, and AUD CAD. So these are the pairs that I have in my watch list currently. You can decide to remove some of them, add what you feel like adding them up on the chart. So without much ado, let's jump into the analysis. So this is a weekly analysis. And guys, the reason why we are having, or I'm having this pairs in my watch list, is that there are major pairs and there are minor pairs. Now with the major pairs, some of them are having the high-low spread. When I say low spread, is the commission the brokers charges on trading those pairs. And the most low spread pair that people normally trade is the Euro USD. So all these are the major pairs having the low spread. That is why I have them in my watch list. So without much ado, let's tackle gold. As you can see, we have gold over here. So as usual, what I normally do, what you're supposed to do, is to let's move to the 3 months time frame. Let's look at what is going on in the 3 months time frame. Let's see what is going on in the 3 months time frame. This is the 3 months chart for gold. 3 months chart for gold over here. Now with this particular chart, as you can see, we are having an uptrend. At least if we are to use trend lines, we can figure out how things are going in the 3 months frame. So starting from here, this downside, when gold was $34, $34 also, so starting from this particular area, we are having two touches on the trend line, so we are waiting for gold to touch the trend line the third time. And when you have two touches on the trend line, we call that trend line tentative. If you watch the previous video, I said that in that previous video, tentative. So this is a tentative trend line. So we are having a first point here, second point over here. Then what we are going to do next is to wait for price. So gold is having the potential from a technical perspective. Gold is having the potential to shoot up once more after price, or after it has traded back to the trend line zone. This particular trend line bounce off to the upside. So gold is having the potential to shoot up once more. So now, knowing this, what I normally do is that I will just scale down to the lower time frame. So as you can see, if we scale down to the lower time frame, we are going to see much about how things are looking over there. If we zoom it out a little bit from market structure, we can have a market shift over here. We can have a market shift over here in that order. Then if we also look at this particular area, we are also having a chart pattern here, which is an ascending triangle. To my best of knowledge, this is an ascending triangle that we have over here. It's one of the chart patterns that we have. So now let's go to the monthly time frame and let's look at how things are looking. So now with this pattern over here, there is a chart, what do you call it, an ascending triangle. Actually this is just a 30 sweep, a liquidity sweep that happened over here. So this is an ascending triangle, and as we all know about chart patterns, if you know much about chart patterns, anytime price breaks out of a particular pattern, it shoots out. There is a serious run to the upside or downside. But one thing about market structure, about the algorithm behind all the charts, is that price will always trade downside to retest the trend line and shoot up once again. So having this pattern, first thing first, we have an advantage. We have an advantage to sell, so we have a sell opportunity. So now let's go to the lower time frame and let's look out for entry positions, how we are going to enter to sell to retest the trend line. That is the most important thing from the lower time frame. So now what we are going to do is to move to the weekly time frame. When you move to the weekly time frame, you can see some bearish formations going on over here. And what we are going to do is to have a clearer picture of what is going on. Now we can use a market structure over here to just determine our entry. So we had an uptrend, a higher high, and we had a higher low over here, higher low. Then we had another higher high over here. We had a higher low over here. We had a higher high over here. So and also we had a higher low over here. So currently we can boldly say that this is our last higher low that we have over here, and price couldn't make any higher high again. Price couldn't trade it up to create or to break a structure to create a new higher high. So this is the last higher low that we have. So this is our power zone. So what we are going to do is to just do away with this particular lines over here. Then we draw a line to the last higher low. If it was to be a downtrend, we are going to draw a line for the last lower high in that or the market structure. So I will do a video on the power of higher lows and lower highs as well. So now this is the last lower high that we have over here at price level 2521, this price level over here. So now what we are going to do, what we are expecting, what you should do, don't complicate things, keep things simple, be patient. What you are going to do is to wait for price to break this last higher low, break this higher low, retest. Probably there are two things that normally happens. Let me just give you a clue. Anytime price breaks a higher low or breaks a particular structure, it creates a fair value gap, or also sometimes it creates a an order block. So when price breaks this structure over here, look for fair value gap and look for order block, because price is going to retest the order block or the fair value gap, and then you wait for liquidity sweep above these areas. When it sweeps liquidity, that is where you jump in for Excel. Before you also jump in for the sell, make sure you wait for that candle to close. The candle that is going to sweep the liquidity, wait for it to close before you jump in the trade. So now without much ado, now we are in the weekly time frame. Let's go to the daily time frame and let's see what is going on. Now let's move to the lower time frame for our entry position. So now what we are going to do currently is to wait for price to break this line. Guys, if it hasn't break this line and retested, you don't have any business with trade. You don't have any business with trade. Don't complicate things. Be simple. Keep things simple. Let your charts be clean. So after knowing this, to me, what I normally do is to do away with these lines, just to have a clean chart. Do away with this line. So what I'm expecting is to have a break of structure, break of the last higher low over here. Then I take a short retest. I take a short straight away, leave the market to run, or leave price to just do its own thing, run to touch my profit zone over here. Then I go out of trade, or I just leave the market. So now this is the daily time frame. Let's scale down to the 4-hour time frame for entry positions as well. So now if we move down to this particular zone, as you can see, price has just filled or consolidating over here. I always say there is one thing about consolidation, guys. Keep it simple. Keep it very, very simple. Keep it simple, guys. Keep it simple. Now understand a ranging market. There are two things about ranging market. Anytime you see price ranging like this, please, all that you're supposed to put in your mind is to know that the banks, there are big orders. There are big orders that has been placed by this smart money. Big orders, selling opportunity, could be a buying opportunity. Big orders has been placed in the financial market. So all that we are waiting for as retail traders, we wait for our fathers. Let's assume children and parents. Where your parents are going, most of the time you follow them. Assuming your parents tell, okay, let's go to this particular mall to go and buy one or two things. Won't you follow them? So that is the whole scenario over here. Follow your parents where they are going. What you're going to do is that with this particular range, first thing first, it's going to break. This smart money have placed orders. There is a huge orders that has been placed. Selling orders that has been placed. That is why it is consolidating. It means the big banks, institutions are taking their positions in the market. So now we are going to wait for it to break. Probably it will break to this particular zone, or it can break to this area as well. Retest the zone again. Then it breaks this one here again. That one to also retest this particular area. Then before we jump in as retail traders over here from the lower time frame, before we are going to jump into this particular trade over here. Keep things simple. Don't complicate your things. Don't be afraid of consolidation. People say we don't trade consolidation. You must get the understanding of consolidations. Big banks are in the market to break things out, or to just switch, or to confuse traders. So anytime you see consolidation, all they are doing is that they are sweeping liquidities. There are two types of liquidities. We have static liquidity and we have dynamic liquidity. So anytime there is a ranging market, big players are sweeping liquidity, basic liquidity. So as you can see, price moves to the top, moves down, moves to the top, moves down, a sideways market, sweeping liquidities here and there. And this way of taking money from retail traders is basic liquidity sweep. So basic liquidity is being sweeping going on currently. So now what we are going to do is to wait patiently. Don't worry yourself. Just wait for them to break out of this particular consolidation. If they breaks, if your fathers want to break to the upside, you join them. If they want to break to the downside, you join them. But from the higher time frame, we have seen that price has just break out of the ascending triangle. So we are waiting for a retest. So to my best of knowledge, I am expecting a sell, a break of structure, a break of this out of this consolidation to the downside. Retest, then we join them as fathers, or we join them as a big players. Okay, keep things simple. So this is a top-down analysis for you from the gold chart. Don't worry yourself. Don't complicate things. Hey, you see a lot of people adding so many terminologies, so many concepts. You are worrying yourself. You are worrying yourself. Don't worry yourself. Keep things simple over here. Keep things simple over here. So that is that for you in the gold chart. Now let's clean this stuff over here. So now let's move to oil as well. Let's move to oil. I did a video, some time ago. I think I've uploaded a video over here. I said that before you do analysis too, you must make sure you check the strength of the US dollar as well. So now that is also oil for you. As you can see, we did some trade over here and everything ran into profit nicely. Yeah, we had a trade over here. Everything was in profit very, very nicely. So guys, now let's jump into oil as well. Let's clean everything from this particular chart. and let's get to the 3 months time frame. This is also the 3 months time frame for oil. As you can see, it looks like consolidation going on over here. Consolidation going on gradually over here. So anytime I see consolidation, it's 3 things I know that is going on. Big players are sweeping liquidity. Then also big players are in the market making their decisions where to go out from that zone. So over here, we can both leave oil here for them. We can leave oil for them to just break out. If they break out to the upside, we join them. If they break to the upside, we're going to join them. If they break to the downside, we're going to join them. So currently, this is a higher time frame, but still we can still do something from here. You can still do something if we want to trade. I'm going to show you how we're going to trade consolidations in this scenario. If we look at this side as well, if we are scaling down to the lower time, you can have some downtrend over here. This looks like a mini downtrend. Now from here, let's go to the 3 months time frame. When you go to the the monthly time frame, we can have a break of structure over here. You can have a break of structure. There is a market shift over here, a return over here. So now we are having, let me put this here. So all these are just liquidity sweeps over here. So now we had a downtrend. We have lower high, lower low, lower high. These are same lower highs over here. Then we had a lower high, lower low over here. Then we had a lower high here once again. Then we had the last lower high, which is a very long wick over here. So let me just keep it. So this is the last lower high over here. And markets traded to break the last lower high over here. To break the last lower high over here. So currently we are having a break of structure over here. We can even put it here. This is the last lower high over here. Price has just broken a structure, retesting this tree. So we are speculating price is just going to just bounce off or coming to sweep, and there's an order block, small order block over here. So price is coming to this order block. As I told you, anytime price breaks structure, it creates 2 things: a fair value gap and order block. So now this time around we got an order block. So price is coming back to the order block to retest it. Then it's going to do something over here. It's going to sweep liquidity from this order block over here. If we are to just zoom it out from the 1 month time frame, it's going to sweep this liquidity. There is a small liquidity, a small order block over here. So price is going to just sweep this liquidity, or you can even decide to target this order block over here to sweep liquidity. So all that we are waiting for is to just have a sweep of liquidity, then we jump in to buy. But I'm speculating price will just bounce off over here and just shoot up once again. So that is that. So now let's get back to the lower time frame. Let's see how we are going to just have an entry position over here. As I said, so we can go to the daily time frame. When we switch to the daily time frame as well, we are having this massive downtrend over here. A huge downtrend as well. After the break of structure from the main downtrend, we are also having a serious retest downtrend from this particular zone in this manner. So what we are going to do is to also wait for a shift in structure. As you can see, we are having lower high, lower low, lower high, lower low, lower high here, lower low. So this is the last lower high, this is the last lower low. Price couldn't create additional lower high over here. So let's wait for price. You can break this lower high, create new lower low, or you can reverse back and break this last lower high. So before we jump into the trade, let's mark our lower high over here, our lower high over here, or even we can this can be our last lower high. Since price traded back to this particular area, this can be our last lower high, or even this one as well, or we can even target this one as our last lower high over here. So if price breaks out of this last lower high, then we are going to just jump in and buy to the upside, or just go for long to the upside. So now we can scale down to the 4-hour time frame. When we scale down to the 4-hour time frame, this is how the whole chart looks like. It looks like price is ranging over here. As I told you, when you see price ranging, it could be that price or these big players, big banks have entered the market trying to just decide the direction that they want to go. So as you can see, there's also a shift of structure over here. There's a shift of structure over here. I'm speculating price it will just want to just reach this order block zone. Don't forget, this is the order block zone that we drew from the higher time frame. So price will just potentially just come to this zone, come to this order block zone, and just reverse or sweep liquidity below this area and just shoot up once again. So that is that about oil for you as well. Now we can also target what do you call it? We can also target BTC as well. Yeah, I've just done analysis, one video about BTC in one of the videos, so you can check for that video. Best top-down analysis, how you're supposed to do your analysis in 2025. I use the BTC, so you can check for that video and just look at how things are. Yeah. Then let's look out for GBP USD. There is a correlation between GBP USD, Euro USD, and gold. All the pairs having the USD are tied to them. When gold is falling, as we have just done analysis for gold, gold is going to fall. So the same way GBP USD is also going to fall, Euro USD is also going to fall. So we are not going to touch on that as well. There is a correlation between them. When gold is falling, you see GBP USD falling, Euro USD falling, AUD USD will also fall in that order. So the reason is that when you see gold falling, it means the strength of the dollar is strong. The strength of the dollar index is strong, or it means that there is a high strength in the US dollar. So if that is the case, all the pairs that is having USD attached to them is going to be weak. That is why gold will fall, GBP USD will fall, Euro USD will fall, AUD USD will fall, and also NZD USD is going to fall, Ethereum USD is going to fall. All the pairs having USD attached to them at the last part, the last letters that is attaching to the first three letters, all of them are going to be weak, fall in that manner. So this is the top-down analysis. So when you get one, when you have been able to do analysis for the pairs having USD attached to them, you can apply it to the other rest of the pairs to know the state of that pairs as well. So what we can target right now is, let's target the other pairs not having USD attached to them. So Euro JPY. Let's target Euro JPY as well. So currently, one thing matters, since Euro USD, let's look at for the correlation here. Since Euro USD will fall, definitely Euro JPY will have a strength. There will be strength inside this. Since the Euro is the first one and the Japanese yen is the second quote, this currency pair is also going to fall because of the Euro. If Euro is falling, it applies to all the pairs having the Euro. The same applies to GBP, GBP CAD, GBP AUD, GBP CHF, GBP NZD, AUD CAD. As I said, AUD USD will fall. So over here, AUD CAD will also fall. We are going to have a fall in AUD CAD as well in that order because of the correlation. So this is how to apply your weekly analysis. When you get to know one other, you can apply the correlation to the other pairs, because it is a cross pair that we have just done. We are having the major pairs, what do you call it, Euro USD, GBP USD, AUD USD, NZD USD. These are the major pairs that we have. Then we have the other crosses as well. So when you get one analysis right for the other stars, you can apply it to the other stars as well. So this is how you're supposed to do your weekly analysis. And one thing about this weekly analysis that we normally do is that you are supposed to target the best or the most opportunistic ones. When I say opportunistic ones, it means the one that has literally review a pattern that you believe is ready to reverse to the upside or reverse to the downside as well, in that order. Very simple. You keep things simple in that order. So that is how to do weekly analysis for your side. So always make sure to keep things simple. But you see a lot of people drawing so many, adding so many indicators, so many support. No, it makes you confused. These are some of the petty mistakes beginners and some intermediate traders do. Keep things simple. Have you ever seen how professionals trade? They look at the charts, very, very simple, take signal. You wonder, what analysis did they do? They look at the charts, very, very, putting things in a simplified manner, then they are taking their entry positions. So guys, always make sure your chart is clean. You keep things simple at your end. Okay, so see you in the next video. Bye bye.